Hello, this is the Chart Profit video, Friday 24th of February, about 30 minutes into the trading day. This from the pre-open today, looking at the E-mini S&P. As we know by most technical measures, the market is pretty stretched at the moment. Some of the sentiment indicators also indicating over-enthusiasm, and in light of that, I'm looking closely at the profiles day to day, looking for the first signs, as I've said here, that the control of the day frame may be changing currently, and obviously it's been in the hands of the buyers. In other words, when the buyers are active, they're effective. We see higher value areas. When we see the sellers active, they're not effective. It's a definition of an uptrend, and as I said here, back on Tuesday, we're looking for the first signs that this dynamic is changing, so closely scrutinizing these numbers here that we see each day. If we look at Tuesday and Wednesday and Thursday last week, you can say that on Wednesday, these positive numbers at the bottom here indicating that buyers are active intraday. We see a higher value area indicating they're effective. Following day, pretty much all selling intraday, and we have an inside value area, so effective buying, ineffective selling. Tuesday and Wednesday this week, same indication. And I've described in the pre-open how the numbers ran on Thursday. Said they were mixed indications based on price, and that's these numbers here indicating that sellers were active. Based on the tick, the bottom ones, we get positive numbers, pretty mixed. We have an overlapping slightly higher value area. We haven't seen an effective selling day for a good while, and that's what I'm on the lookout for at the moment, just in the first instance, seeing if that control is being wrested away from the buyers. We've been looking at the minor, which is now the 17-day point of control at 2360. It's the first minor level of support resistance, and we're just looking at how price is positioned relative to that level. Just looking here on a 30-minute chart, we can see 2360 up here. I'm currently printing below that. We've opened the session down here. Another reason to be quite cautious at the moment, or at least closely watching the sellers' activity, is just the current distribution. I mentioned back on the 14th that the current distribution suggested the E-mini may find resistance up around 2360, which is here. We've yet to actually see a value area printed entirely above that level, so that's another reason to put these numbers day to day under the microscope a little bit, just to see if there's any change in the smallest time frame of that control we talk about. Here's the breadth indicators, daily breadth indicators for the New York chart through Thursday's close. The two indicators that we watch closely are the net new highs 25 indicator, this black line here, it's above zero, which is good, that's still supportive, and the percentage stocks greater than their 50-day moving average in my New York list, and that's still above 50, so that's supportive. That gives us a continuation of this green area here on the chart, representing a little system that I've written for New York breadth. So that still looks pretty healthy. Momentum above zero, so it's trend up on the daily time frame, and momentum is actually still up. It's rare that we see a sell-off of any large degree while we see green here and momentum still heading up. Even so, with the current overboughtness in the market, I'm looking out for the sellers' effective activity. And we haven't seen that for a number of days, certainly back to the start of this chart, which was early February, and actually way before that we haven't seen effective selling. And all of these days that I've just ticked on the chart here showing effective buying, so in that sense the buyers are still in control. We'll look at the sentiment indicators next. On the day-to-day pre-open report, we look at a useful short-term sentiment indicator, which is my version of the RIDEX assets ratio. Shows the relationship between assets in bullish RIDEX funds and assets in bearish RIDEX funds. That ratio actually reached 12.15 back on the 2nd of February. That was the highest since May 2015, which was here. Very often that will indicate that the upside is limited, and what happened after that, the market went higher and the ratio came off pretty quickly, actually below 8 at the moment. So the RIDEX traders certainly haven't embraced the recent rally or the recent leg They have a bad track record, but this indication here of this multi-month high was not particularly telling. We have noted that the bear fund assets in isolation that I follow here are historically very low at this level, but you do usually see the bull fund assets, I'm looking at them here in isolation, usually see the bull fund assets at market tops, or before we see a correction in the market, usually pretty elevated, and at the moment I can't say that's the case. And if we look at the total assets of the funds I follow, both bullish and bearish, again the total kind of participation is still pretty low here. You do tend to see plenty of participation at market tops. On a week-to-week basis, we also look at the public poll from AAII. Here it is this week. The bulls percentage was higher at 38.5. Not very high considering the market out at new highs here. 4 weeks ago, the bulls percentage fell to 31.6, which was a 12-week low. That's just before the market began this leg. Higher. Bears percent almost unchanged this week. 3 weeks ago, bears percent reached 34.2. That was a 13-week high. Investors Intelligence, that's the newsletter writers, bulls percent slightly lower this week at 61.2. 2 weeks ago the bulls percent reached 62.7. This is giving us a different picture. That's the highest, 62.7 is the highest percentage from the bulls since December 2004. So the newsletter writers very bullish, and 2 weeks ago the bears percent fell to 16.7. That was the lowest since July 2015. Again, this is a contrarian indicator, and newsletter writers, as of last couple of weeks, extremely bullish. We looked at this indicator last week. This is information from the Lipper US Fund Flows report. They reported equity fund, including Etf inflows, of 2.7 billion this week to the 22nd. I said that if there was a reasonable inflow this week, there was an outflow 4 weeks ago, that would lift the 4-week net flow to a new high for a good few months. That's what's happened. So the 4-week flow is at 30.4 billion, and that is now the highest since November 2014. Been a lot of money flowing into equity funds in the last 4 weeks. Again, a contrarian indicator. This is one of our key charts, the Russell 2000 ETF. Key level is 136.70, which is the 2-month point of control. For 10 days now, this ETF, which has been relatively the laggard amongst the stock indices, but nevertheless holding above that important level. Price back down here below that level would indicate a weak price location. Seen a little bit of weakness yesterday, trying to recover currently in the sort of intermediate time frame. Not too much of a worry as long as we're consolidating above that point of control. That's the best reference point I've got. We're still in a strong price location here. Picking out the Russell 2000 IWM as a key chart because it prints currently close to an important level that will give us a clue if it's broken. Unlike most of the others like Spider here, well above its 2 month. You can see how much the Russell 2000 has been lagging this chart, but up here no useful local reference level to work with. Quick look at the FTSE 100 index, UK FTSE 100. We've had quite a weak day today, printing something like a 10-day low at one point, recovering a little, but again holding the 4 month here at 71.74, which is the important level. So in the intermediate term, at least, the FTSE still in a strong price location. Price down here, again like that Russell chart, would give us a clue of general weakness in the markets. Same with the German DAX. This level here, the 3 month, is the first level support. So again in the intermediate term, printing in a strong price location. This is TLT, the T-bond ETF. We know that recently, a couple of weeks ago, the major point of control moved up to 119, and we've found support on that level, and bonds are up off that point. So as long as TLT, as I've said in the pre-open for a while now, holds this level, it's in reasonably strong position for a bounce here. Price back below this level would immediately, as I've been saying, change that scenario, put the chart in a really weak price location. That's why I was quite pleased that bonds held that level there. Of course, strength in this chart would most likely indicate weaker equities. This is GLD, the gold ETF, from this important low over here to this high. We were watching the halfway point here. There was some resistance at this point, and we had a higher low above it, which is a good pattern, and we've now reached the major level that I've been talking about in the pre-open for a while, which is the major point of control at 119.84, and that looks like where we've stalled today. Price above this level, of course, would indicate higher for gold. This is last week's ebook looking at the commitments of traders data for gold. You can see the commercials net position here at the top looking pretty strong. It's been moving higher for a good few months. The large speculators, their net position has been moving lower. We'll see what this information gives us this week, but currently looking at it here from last week, from a smart money, not so smart money point of view, this looks pretty strong. Definitely not so in the crude oil commitments data. Top line here, the black line, again is the commercials net position, so-called smart money, and they are on a real low here at the moment, and you can see the large speculators very bullish on the prospects for oil. So we get these numbers at the top here, and again from a smart money, not so smart money point of view, this does not look all that encouraging. Looking here at the United States Oil Fund, we've seen it hugging this major point of control at 1144. If this chart gave us anything that looked like a lower high below that level, I would really not be happy about this chart. Made a point in today's pre-open, underlined here, charts are currently looking weak for the US dollar. So at the bottom here, when we look at the supporting charts each day, talk about the dollar index, the pound dollar, the Euro FX chart, and the dollar yen. Let's review those now. Dollar index rallied back last week on this to find resistance at the halfway point of here to here. It's always something to watch out for from a reasonably important high. You measure to the first low and then the rally back. If it's a particularly weak chart, it will quite often find resistance at that halfway point. We also have a 6-month on this chart at 101, and earlier today we were printing down here in a weak position. Looks like the chart has struggled back, prints just about on that point of control. Direction of the dollar recently, we know nothing's ever easy to call, but I feel that the charts that we look at here, the supporting charts, the 4 charts that I follow, have not been given us a coherent, clear picture, at least in sense that they're lining up in terms of strength, weakness of the dollar. Thought earlier today maybe that they were looking, so dollar weakness was coming through on most of these. So here we're back to the point of control. Again, looking for time underneath here to give us that indication. Here's the pound dollar chart. 124.78 is the 15-month, and again we've been oscillating around that recently, just probing above it the last couple of days. What's happened over the past week or two, we've seen the halfway point from this high to this low, this dotted line here, has supported the chart. Again, that's often a sign of strength, and then we moved above the point of control. So as long as it holds above that level, I'd say again that was a sign of strength, therefore weakness for the dollar. Probably want to see some more time spent up here, preferably a higher low. Euro FX chart currently printing very close to its 7-month, 1.0597. That's the red line here, very close to the halfway point from this low to this high. This high. Again, a clear higher low above that level would be an indication of strength, but once again seems to be hugging this point of control. That shows what I call a lack of directional conviction. On the dollar yen chart, there's a major halfway point at 112.47. We're printing below that on this chart, some strength in the yen here, and the 4-month at 113.61. So this chart in weak price location for the dollar, as I say, some strength in the dollar, strength in the yen, some risk off reaction from overnight in Asia and earlier in Europe and the US. And we're seeing the Australian dollar in a stronger price location above its major point of control here at this level. Any kind of technical confirmation of something like a higher low above that level would be bullish for this chart. That would be this kind of indication down here. So from an oversold level on the oscillators, we get that above that level, that would likely indicate higher for this chart. Again, you can see how relative to the dollar, or with the dollar US dollar component in these charts, still pretty mixed. Just kind of looking for that theme of dollar weakness to be confirmed. Said a few months ago when dollar index was in its uptrend, that's targets up around 104, and we had a reaction there, and possibly we've got a lower high on that halfway point. So price moving convincingly down here underneath the point of control would have me thinking that way. Okay, that concludes. Once again, wish you a good weekend, and thank you for watching.